All right. Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 18th. Mike Boutros with you on the horn. Good to see you guys in the room. Aurelian, March, and Steve, Ted, the whole crew is here. So I'm pretty excited about this week, guys. You know, we've been trading on a lot of these trades in sort of a ranging type of fashion. You got a couple breakouts here, a couple breakouts there, but things have been pretty tight. Looking for that to change either this week or next, but certainly sort of the stage is set. So lots to go over today. On the menu, we'll kick it off with DXY, dollar CAD, Kiwi dollar, gold, euro dollar, Aussie dollar, sterling had some employment figures that came out today, more inflation data tomorrow, NASDAQ, dollar yen, SPX, a quick look at ETH, Ethereum, and Bitcoin. Any other questions or trade setups, guys, as usual, feel free to throw them on the message board at any time. So let's jump right in. Here's what last night's update looked like and what we were looking for on the DXY. So look, from the dollar standpoint, it made a pretty major test of resistance. We talked about this last week, right at the start of the year. Big zone. Last year's the 2020 open, last year's high day close gives you 15 to 95.67 there. We pulled off. The decline, one of the levels I was thinking about scratching was right here at that swing high from October in 2017. But look at the close. Last week we literally closed 1 pip above. Here's what the line chart looks like. So it's not complete drop off just yet. We're seeing a nice little recovery here. From the weekly standpoint, okay, resistance starts to come in at this confluence zone here, somewhere near 95.90s. Does everybody have the picture button? Ty, you having any issues on your end? Guys, can I just get a quick okay if audio and picture is good? Aurelian says, okay. All right, thanks for that, Aurelian. Ty, if you're having issues, try logging back out and coming back in again. Anyone else in the room with issues, do let me know. We should be good on this end. But for the dollar index, the recovery, again, is what we're focused on to the start of the week. Here's what it looks like on the daily chart. So big zone, 94.65. Here is the rebound. That's the March lows, okay, from that 2020 drop at 38.2, okay? Gives you support right here. Here's the rebound. Now, yearly open resistance, guys, comes in at 95.67. So we're at resistance right now, a 38.2 retracement of the drop. You got a 2019 low day close, nice pivot in price. Looking for a reaction here today. If we close today above 96.67, in my humble opinion, that would be the go for 96. Okay, remember on the weekly chart, 95.90s is where you start to run into that confluence zone on the upside right here. So testing initial resistance right into the open of trade, topside breach from here, look for that pivot along that 2022 yearly open. And again, a topside breach there would unleash 96. Near-term support still at the 95 handle. The weekly open comes in right ahead of that, but that's still your near-term support. And at this point, I'm comfortable putting this as our bullish inval, guys. If we get back below this region, right, you threaten that larger push back into key support here. By the way, this almost completed a 1618 off the high. Nice confluence area where we rebounded. Again, major pivot in price, as you can see, keeps us looking for resistance here on this recovery. Now, as far as US data is concerned this week, you're pretty quiet. This week's major event risk is going to come by way of inflation data from around the globe. You got sterling inflation on tap tomorrow, Canada inflation on tap tomorrow, Eurozone inflation on tap on Thursday, Japan inflation on tap on Thursday. So certainly with the inflationary picture sort of the main focus here, you're going to get a nice, larger update rather across the globe on where the inflationary pictures stand. Can I have the weekly DXY again? Yeah, Aurelian, it's right here. Feel free to take a snapshot. But no changes from the update last night, right? Those are the same exact levels. Questions on DXY? Again, there's a lot to take into account here while doing basic dollar analysis, right? I want to take a segue real quick and show you guys what's happening in yields. This is going to be making headlines today. Here's a weekly chart of the US 10-year hitting 2-year highs, essentially, okay? Remember last week we were talking about the high week close, that was 172. We closed above that, or a couple of weeks ago, we closed above that and held above that for the last 2 weeks. First level on the upside, 191. That's a 618 extension from the advance off the lows here in July. All right, this is the weekly chart. Let me take a step back. Here's what it looks like on the daily. And this is where we've been doing most of our analysis on this. So here's what it looks like, okay, on the 10-year. Levels that we were looking at last week, resistance cleared on Thursday, closed higher on Friday. Here's today's stretch and exhaustion possibility, right? Even if you exhaust lower, near-term support right along the median line, 177 on the long side. Again, you saw that 1618, 190, 193 is a nice pivot from here back in 2019 and 2020. So if yields are breaking higher, that would, again, grant more allowance for the dollar to kind of get you another push. But from all prospects of price action, as we look into this, could be a 1, 2, 3, 4, 5 wave completion, which would suggest we're at risk for near-term exhaustion, near-term pullback. The broader focus is still higher, but on this immediate thrust, I would start to get concerned for some back and forth here. And that's what we're looking for, right? We've been seeing a lot of ranges. Inevitably, do want to see these ranges break, but could have a little bit more on this recovery, specifically with the yearly open just a bit higher in DXY. So quick look there at what we're looking at with the DXY here as we start off the week, start off this session. Near-term resistance 95.55 here being tested. Questions on DXY? Hey man, sorry, a little late today, no worries. Great to see you in the room. Okay, so that's DXY. Higher yields, you're seeing this thing move higher. Again, US data is kind of null this week. It's kind of ancillary prints. The major releases are going to be all these inflation reads across the globe. So keeping a close eye on this one. Near-term bullish inbound, like I said, is 95. Anything beyond that, you're risking another dump into support. So levels are well defined here. Next from last night was dollar CAD. Man, this thing's at such big support. Again, really interested to see how we start the week. Here's dollar CAD on the weekly. So on the weekly, the basic thing that we're looking at here is this structure. Last week, we were talking about the 52-week moving average. We closed above that. Here we are kind of being contango again in a little straddle there of that major longer-term weekly moving average. Slope support is just lower. So there's not much, there's more to be desired here, let's say on the weekly chart. On the daily, however, looks a bit different, okay? Here's the major support zone that we were talking about. This gives you 2 equal legs off the high, 1, 2, 3, 786 off the low, gives you 124.32, key support zone for Aussie. It was the same support zone, guys, we highlighted last week. Remember, you can always click on the previous link, see exactly where we were on this setup a few days ago. So this is back on the 11th. I'll show you the scalp in a moment. Called bullish invalidation. The weekly open was a perfect play right through the 618. There's key support. So as we go into this now, starting the week, here we are on dollar CAD, right at support. You have a weekly opening range taking shape right below that 618 retracement, looking for a near-term breakout. It's got to be a break below 24.32 to mark resumption of the downtrend. It's got to be a close above the weekly opening range highs, just a bit higher here at 25.56 to validate recovery. Now, a lot of people obviously will always be looking at oil prices here. I do think oil prices are looking a bit toppy on the near-term front as well, while I'm still wildly bullish. So you could see a little bit of a reset here. Wouldn't be too surprised to see some recovery. As far as the dollar is concerned, that pump fake, right, that rebound is at resistance on the DXY. By the way, Looney is not on the DXY, but just as a prompt there. So resistance, support, look for the breakout. At the end of the day, it's been a very precipitous drop. I think it was a It would have been a 5-week decline or a 4-week decline had we not put in that doji essentially back on the 3rd there on the start of the year. But you can see we're coming into some area here where we start to look for possibility of exhaustion, anything sub 2430, and this thing could fall apart pretty quick, I think. So looking for a breach of the weekly opening range for guidance here. We are at support. Watch oil prices. We continue to track this one. Canada core inflation data is on tap tomorrow. Now, interestingly here, we're supposed to see core inflation actually come off just a bit. It's supposed to come in at 3.5. The previous read was 3.6%. Okay, this is year-on-year prints. That's the core read. The headline inflation figure is supposed to be 4.8 from 4.7. Not as bad as the US, but still an uptick on the year-on-year headline read. Questions on Loonie? All right, that is number 3. Number 4, here's Kiwi dollar. It's just exquisite near-term price action here has continued to offer some really good clarity. Yet another one, which is at near-term support. Here's what it looks like first on the weekly charts. And here's what we looked like last night. So on the weekly charts, there's really not much to look at here. I published this one on Daily Effects last week as well. Major resistance, 68.98 into 69.40. That's the 2019 swing high, last year's opening range low. And that's gonna be your key resistance on the weekly charts. Support, that's pretty easy. Support on the weekly charts is right at the yearly opening range lows. That takes it right into the 2020, yearly open, 38.2. The rally from that 2020 low is 67 into 67.33, key support. So from 1,000 feet up, okay, this is the whole focus for Kiwi moving ahead. Ty says, do you updates on SB, or should we look at the no, Daily Effects is always going to get setups that have already published here, Ty. So that was the first Kiwi update for the year that Daily Effects got. We've been tracking it here since the start. So no, sometimes I'll just, you know, throw them a bone, give them a nice little a larger term view here. But from the 1,000 feet up, man, range bound. Daily chart looks like this. Here's your yearly open, monthly open, set a low. You try to test the high, and now your monthly opening range is set. Okay, on the way down, forget this. Again, that's your key support at the 67.33 on the daily charts, on the weekly charts rather, gives you the 2020 yearly open. Let me drop that in there just for some consistency here. Boom. Okay, that's your key support. Intraday, here's what I'm looking at. So to start off the week, and again, last night I gave you guys this update. We set up a really, obviously Monday here in the US was a day off, guys, Martin Luther King Day. Markets were, you know, pretty much still here. So we set up a nice little quick range, but the key support zone, 618 retracement, just lower. I even told you guys, just lower was that parallel. Okay, we're right there, 67.60s. The low was 67.63. So a good call, okay? We made that drop into support, looking for a reaction here today. At the end of the day, if this thing breaks any lower from here, these lows were measured moves from here. So I should probably, just to clean things up for you, drop that 100, drop that zone. This is the 786 retracement, caught the lows. If we break, that's just a near-term target. You're looking for 67. But at the end of the day, looking for reaction along that slope right here, right now. What would be near term? So near term bullish inval, like what would shift my focus to the higher? It would be a weekly open pop. So right here. Okay. Yep. Okay. So let's say 68. Near term bearish inval, 68. Does that make sense? So Kiwi is clear on data as far as I'm concerned. I don't think we have any data of note out of New Zealand this week. So we'll continue to be tracking what's going on in the base dollar move here, but looks pretty good. Looks pretty good. Questions on Kiwi? That is number 4. Eman, here's gold, number 5. Are you in this? Man, oh man. So you guys know where we stand on gold. You know, longer term prospects in my mind has always been the same. We haven't changed. We're still in a multi-year uptrend. The question has been since we started the year, and I haven't dropped the yearly marker here, so let me go ahead and do that at this point. Okay. So here's your yearly open. Battle of the 618s. We talked about this last week. I'm short from 1825. Okay, so you have some stuff to look here at, Iman, with this rebound here. So pay attention. Key region, and all that matters by my part into the start or into the close of the month, essentially, is a break of this 618 range. 1830 resistance, 1783 support. That's also, guys, the yearly opening range low now. The monthly opening range low. We spiked right into that. Here's resistance. We opened the year here. So the levels are well defined, okay? All things held constant, we're still within this I guess you could say, almost multi-year consolidation crunch. Remember, these crunches typically resolve 10% ahead of the apex. So we could get a couple more weeks, but I don't think we're gonna get that too much longer. Yeah, Ty, I'm right with you. What a coil, right? Coil galore. And with the inflation picture in the forefront, with all these concerns about the geopolitical problem and what that means for energy prices, I think this is gonna get a clearing rather soon. Okay, so keep your eyes peeled. Guys, this is from the weekly chart we're seeing this clarity. So what does that mean for us drilling in deeper? Here's what the daily chart shows. Before I jump into it, just want to show you weekly momentum, right? 52, slight bullish tilt, but really not much. So we're looking for a clear conviction breakout. Here's what it looks like on the daily chart. Your monthly opening range is set just below the yearly open, Fibonacci resistance, and even the July high day close. Very nice pivot in price. Here's your yearly open, monthly open, drop into that 618 on the downside. Here's the range. Now, you might be thinking to yourself, well, Mike, 1783, 1830, that's a pretty big range, right? How am I going to operate in that? Well, that's what we drill down deeper for into the intraday. And here's what it looks like. Whoops. Okay, so my concern, Eman, with that short that you had on there, good entry, but I was looking for this to ground out. This is your bullish inval, right? I was looking for a low. We may have just missed it. I don't know. We'll have to see how this US market opens, but was looking for a correctionary bounce off uptrend support. If we resolve and break the weekly opening range to the upside, that would probably take you at a break even. What are you, 1825? Okay, so you're in from last week. Yeah, amen. Great entry. Again, my personal opinion, I probably have a break-even stop on that, if anything. But if this does not go for a tag of that 1800 mark, 1830, and we're back on our way. Here's what this looks like, by the way, guys, on the 240-minute chart, 4-hour, looking a little further out. Very nice structure, very well-defined zones. We're basically just looking for a clearing of this 1830 level. Questions? Drop that 38 too at this point. What else can I say about gold? If it turns into a doji, well, it's way too early, right? It's way too early to call this a doji. But if it were to put in a doji, that indecision on the pullback would actually leave this a little bit more leaning to the upside. So we'll have to see how this candle closes. Way too early, right? All right, that's gold. Any questions on this one? All right, that is number 5. Nice opening range for the month is still basically what you're looking for. Ty wants to take a look at silver. You know, it wasn't on the list. I haven't been tracking it, but let's take a quick look. This is a setup I obviously put together for you last week, Ty. I'm not really tracking this one. But yeah, looks like a near-term breakout. Stop traffic. Hold on one second. Okay. Nice 40 bounce there. This looks like a near-term breakout. Watch today's close, Ty. Okay. The resistance level that we're checking right now is still resistance. It's the 50 of the drop. It's the high that you made in December. And it's also this month's opening range high. So watch today's close. You can see that we're kind of struggling there right now. If we break here, this is just your initial target. So 23.95, 23.87. That's a 618 off the high and 100 off the low. My favorite Fibonacci confluences. Okay. So, loving it. Perfect reverse. I think you mean inverse. Head and shoulders could be a possible play, in which case the neckline, it's a tough call. I wouldn't say it's a perfect head and shoulders, but let me take a little bit closer of a look here. And here's what the daily chart looks like. Possible. It's still going to be all determined on this. So here's what we look at. I'm going backwards here for you. Here's what we look like on the daily chart. Okay, so the 75% parallel comes in just higher. But at the end of the day, if we break out from here, guys, this is a monthly opening range break like no other. Very clean levels. So what does that mean for gold? It could be tracking the same type of play here. Monthly opening ranges are preserved on both of these. Monthly opening range trades have been beautiful setups for us and a key part of a lot of our analysis here. So I think you wait on both of them, but boy, from the intraday chart, I'd have to say, where is XAG? Sorry about that. I'd have to say, Ty, that looks like a breakout, okay? And it would keep the focus on that region right ahead of 24, major fib confluence region, okay? Bullish inval will be today's low, right here. Okay, anything beyond that, and you're basically just looking for the resumptive trade on the downtrend. But more likely than not, if we close above this, that's your key region. Ty saying reverse starts at the 27th. Yeah, I see what you're talking about. You're talking about like this, right here, left shoulder, head, right shoulder. I get it. Either way, this would be the neckline. So you'd still need a precipitous break above this to kind of validate it. Now, if that is the case, Ty, and I'm just not a big fan of head and shoulders off where they're not off extremes. It would have been a lot better here to rebound and kind of set one here mid-trend is a little bit iffy, but if it does, that would give you a measured move way above. We'd be looking for basically like 2480s, I think, in that scenario. Where does the 786 come in? Let's check. 2450s, let's call it. First initial target on the upside. Nice setup. Thanks for bringing this up. I wasn't even gonna look at this today. So gold and silver, 5 and 6. All right, let's take a step back here and take a look on where we are on the euro. So euro dollar, we loved the recovery. Remember, into the start of the year, our base case scenario was to see dollar weakness early in the month. Well, we just went over the DXY levels. We saw dollar weakness early in the month. Euro, we were looking for euro strength early in the month. We got it. And where we failed last week was very important. Is the 2019 yearly open, 1445. Okay, 1460, a basic 236 off last year's high. Nothing major, but you also had uptrend resistance. So not too surprised to see this pullback off resistance, a big level, but it doesn't leave us much clarity moving forward here on the weekly charts. It kind of still puts the focus on the range that we've had for the year, which intraday isn't going to be all that helpful. Oh, Eman, I'm sorry, I missed your levels there. So 1823 is probably going to test 1830. If we break, yes, 1830 is very big. I'm also short at 114.45. Eman, on gold or on euro. Well done. You're killing it. So here's what euro looks like on the daily chart. I love that entry. Love the entry. That was huge. And in fact, a little tidbit here. So we went over the gold levels, guys. No change to any of these. We slipped below that 38.2 and rebounded. So the levels are still the same there. Going back a little bit further, here's what the euro looked like for us last week. This was published on the 12th. And this is why your guidance, no more comment. Amen. They're not my levels. I'm just helping you find them, right? But this is why I love your entry. Conviction in your levels, right? We broke through this region on the 236 and rallied, but then we pulled back. So whereas a lot of people would say, oh my God, that's a breakout and got FOMO, I need to get long. If you look, you got one divergent, two divergent signals. So again, higher high, higher high, higher high, equal highs on the first two, lower highs, and then a trigger break. So the conviction was there for that to be a failure checkpoint, right? And then we pulled back. Near-term support, as we highlighted last week, was 138.35. Last week's open, 113.83. Last week's open was 113.51. We've already kind of taken out that 85, 83 region. There's the yearly open. Here's a basic 38.2 of the rally. Okay, so for Euro's part, I do think you risk a little bit more of a setback. I'm not going to chase from here. Iman, I'm not sure what your target is, but 37 or 1370 for me was the first sort of lateral level I wanted to take a check at. So we're there now. Near-term resistance now drops to the weekly open, which comes in right around 1410, 1411. If we break lower from here, the 50% retracement comes in near 1330s, guys. I don't want to focus on that because it's mid-range, but the bottom part of this is 113. Don't necessarily think we get that low, but Eman says targeting exactly last week's open 1350. Great. I mean, again, like I said, here's the 50, 1335. Last week's open, you're absolutely right, was 1350, right below that swing low right there. So I don't want to chase this. If you're holding shorts, this has disclaimer, I'm not. I kind of got kicking myself now because I think that was a great entry last week. Just you're right, Amen, till we have more clarity. Yeah, just wait. As we're in the money here, I'd be ticking a little bit off. You're obviously break even or better, but the focus is, where do we bottom? Where does this decline find some support? One extension I was looking at this morning, and we don't want to be chasing stuff here, but just real near-term stuff. The 100 is there at 1330. If you use the rendition of like Friday's low then the Monday high, which I don't really like using because, again, Monday was sort of a holiday, gives you 1350. So either way, that zone is sort of like the butter zone. I think we look for a little bit more of a stronger reaction here for Euro. But, you know, since the start of the year, it's been a tough call. Here's your yearly open. We were looking for that rally. As you guys know, I took that long and then I got stopped out into the open last week before it ripped. Literally, it was a break-even stop. You know, hindsight's 2020, but in any event, was playing that a little too tight, right? So this was our major target and our final target. Here's the pullback and the reset. How deep do we get? We're looking for support somewhere in the range of 1330s into 1350. When do you post the SB webinars? Is it regular time? Yeah, Ty, as soon as I'm done here, I set the video to be rendered. It takes about an hour. Upload time, rendering time adds another hour. So usually by 11, this will be up. I think 1335 is also a pivot. Eman, what pivot is that? Daily? Weekly? It caught many days on the close, huh? 1335. Well, interestingly enough, I mean, we could keep going here, but 1330, what is that, 1338 is actually the open from last month. So either way, looking for that reaction just a bit lower from here for guidance on euro. No major euro data of note this week. Oh, I stand corrected. What am I talking about? Euro core inflation. I'm sorry, that's on Thursday. Euro core inflation accounts. All right. That is number 7. Euro. Inflation on Thursday. Watch that one. Aussie. So, Aussie. Here's what the Aussie update looked like on our last update here on Daily FX. Excuse me, on SB. We were talking about the breakout of this key zone. 100 off the low, 618 off the high. Beautiful breakout, guys. Absolutely magnificent. So you saw the break, see an accelerated pop, first level of resistance at that 618, 73, 73.43. Big resistance to 618 of the rally. Here's Aussie on that breakout last week. Okay. Boom. Here's 73, failing ahead of 73.40. Now the pullback has retraced the entire breakout. Near-term support now gives you the 786 of this year's range. Typically, we don't take retracements from, mid-trend, but when we're talking about something like this, it's the yearly open is right here. So this is the yearly range retracement. Gives you 71.70, 71.69 support here, and near-term bullish inval. Basic support off the lows. 1, 2. This would be the third. Watch for a reaction here today in Aussie. A break below would be risky. A break below would be very risky. Remember, the monthly opening range comes in right here at 71.27. Maybe if that breaks, that'd be a level to watch, but objectively speaking, this is your key support here for Aussie. Employment data on tap, what is that, on Thursday also. Expecting a print about 43,000, 4.5 unemployment rate from 4.6, so a little bit of an improvement there. Aurelian, can you break that down? It says, please note that last Thursday, the prior Tuesday ending, January 11th, was duplicated on Thursday, January 13th. I'm a little confused what you mean by that, Aurelian. Give me a little more from, I'm not sure what you mean. The recording was duplicate. Oh, which one, on the webinar? I am so sorry. Yes, okay, thanks for that, Aurelian. No one gave me a heads up on that. I might have just been a little brain fart there and posted the last one. I apologize for that. Yes, I will be sure. We'll have the right recording on today. Don't mind me, guys. I'm just getting back in the swing of things. I was on paternity leave for a while. I got a 6-week-old. So a little bit of a brain fart there. Excuse me on my part. Aurelian, I'll have today's recording up. No worries. So I just wanted to take a step here back and show you the Aussie weekly charts. I'll be looking at it, and again, early in the year, guys, early in the month, we're really heavy on the weekly charts because that's what gives us guidance. If you don't know where you're on the weekly chart, you're trading blind on the intraday. So here's Aussie, and there's really not much to write home about here, okay? You got 73.40, 73.80 key resistance. Down here is key support where we grounded last year. More to be desired on the weekly. Daily, much cleaner, right? A lot of people are saying this could be a bear flag formation, possible. You did see some hallmark things here which you want to focus on. Remember, in strong downtrends, you want to find resistance ahead of 60. In strong uptrends, you want to find support ahead of 40. So the momentum profile from the beginning of the year keeps us range bound. In fact, the monthly opening range is still preserved. So there's a lot sort of to focus on here as we start off the week. We're at the low day close now. Okay, that level is 71.83. Did I just move it? 71.80. 71.80, okay? That's the low day close we made on January 7th. Uptrend support is right near that. So we're looking for a reaction here today. Looking for a pivot off the 71.70 level. Questions on Aussie? In the event that we do break down, I'm just going to throw this out here just for reference. I was looking at this earlier today as well. Possible slope at play here may give us some guidance if we break the downside, but it's all based on what happens today around this key mark. All right, that is Aussie, number 8. Number 9, here is the British pound. So sterling looks like this. Kind of messy, but hey, that's classic sterling for you. Here was our last update. We're in over Kiwi. Here's our last update on sterling. Where was it? Right here. This was back on the 11th. So here's the weekly charts. Levels that we were talking about right into the start of the year as major resistance. 2017 high, 136.58. And then that 52-week moving average, below week close for that July dip, 137.46. Obviously, we hit 136.58. Look where the high registered. Right at 137.49. Okay, we were looking for 137.46. So while the slope looks a bit messy that we've broken the upside, that's your quintessential failure trade, exhaustion trade, right? Quintessential. Momentum profile here remains bearish. Remember, we drove into oversold condition or sub 40 for the first time last year into the close. We're looking for resistance at a 60. Here's what it looks like on the daily chart. And here's what it looked like last week on the daily chart. Looking for resistance at that 2021 yearly open. And again, 37, what was that? 37.46 on the upside. Here's the pop, tag, and failure. Throw over. Is this a sterling throw over? A very common event in British pound price action? Possibly. Puts the focus on the trigger break there lower into the start of the week. Here's what it looks like on the intraday. And here's what I showed you guys last week. So again, pop through, went a little bit higher than that 50% retracement. That's why I removed it. 37.46 capped the advance and then ducked back lower. So here's what it looks like now. I'll try to give you guys an update on this either today or tomorrow, but could be a near-term bull flag. At the end of the day, looking for support, basically 35.70s on a confluence here into the start of the week. Bullish inval is at this year's yearly open, and that's 35.29. So not a big fan. Obviously, we broke the upside of this formation, but you saw a pivot as support, a break below the upper parallel, saw the accelerated drop. I'm going to continue to watch this formation. Near-term support converges on the upslope at the yearly open. Now, all things held constant, I'd be putting bearish inval back at 36.46. But more importantly, just focus on the median line. If we get back through this median line, the upside, then okay, we're on resumption. Till that happens, the focus is on where this drop finds support, with this being the more important focus support at the yearly open. Again, heading into tomorrow, you do get core inflation from the UK. We're expecting to see a core print of 3.9 from 4%, and a headline read year on year of 5.2, a little bit uptick from the 5.1 we got previously, but that's on tap tomorrow. So watch this. At this point, intraday, even on the 2-hour, you're driving into oversold. Let me see on the 30-minute. You're actually recovering from the oversold, so watch out there. Near-term resistance at this point. Watch that confluence here. This is still bearish inval, but watch that confluence near 36.18. into the open of US trade today. Pull back in sterling. Keep your eyes out on those targets just a bit lower. Any questions on the British pound? Okay. Next up on tap, we're going to take a quick segue out of the FX block and go over NASDAQ. Ty, you got me looking at this, bro. Look what you did. We called the low. We literally called it the day it happened. We were talking about it in the Monday webinar. I think you were asking about it. We highlighted that 100% extension at the lower parallel, highlighting this recovery. Now, the recovery actually got higher, okay? It did fail, and we're now making another attempt at the pullback. So this is the intraday chart. I'll show you that in a moment. Here's the daily, just to keep things sort of on an even keel on what we were looking at. I know this is a very messy chart, but again, side-by-side comparison. There was resistance. We did get a little bit higher, right? We did get a little bit higher, but not on a close basis. Look at that, right? So beautiful hold right at where we noted resistance. Again, intraday got a little bit higher, but you never got a daily close above. Here's the pullback. Now here's the problem. And the SPX is facing this same risk, which is why I think, guys, this is going to be a very important couple of days, because we're threatening some major breaks of support. Here's the daily chart as it stands now. Obviously, US markets haven't come online yet, but this is pre-market, gap lower, and we're already back above. So as it stands, again, look what it looks like on the line chart. We're at support, guys. We're at support, and if this breaks, it is problematic for broader risk trends. Simply put, simply put. Now, again, this is kind of messy, and I just wanted to show you a side-by-side comparison of exactly what we were looking at last week. Okay, we're right back at that 1554 level, and that's still near-term support. Looking at this on the intraday, I was playing around with this earlier today. A possible slope tie for the decline. Now, 2 equal legs off the high does give you, like I said, that was that 1535 level rather. Here's the rebound from last week. Here's the setback. So all things held constant, you came off of downtrend support. You'd be looking for resistance at downtrend resistance. And the 618 comes in perfectly on that parallel up here at 16153. That's going to be your bearish inval. Okay, so for the bulls out there who are looking for the resumption of the broader uptrend, that's the level we need to clear on a daily close basis to kind of clear this out. Ty saying a gamma squeeze underway could be. I think, you know, let's take a step back. I don't want to get into the fundamentals, but when we look at where the Fed stands, guys, they're behind the ball. Again, my humble opinion, but they were behind the ball with this whole transitory thing. You know, who was it? Mohamed Alarian was on CNBC earlier today. And he was saying the issue is that the Fed painted themselves in a corner. They were projecting this whole thing being transitory for months and months and months. Now it doesn't seem so transitory, and they have to play catch up. The problem is total policy mistake. I'm with you 100%, Ty. You know, people don't like hearing that, but that's, in my humble opinion, exactly what's happening. You got the Fed now, which has to do a trifecta. They got to end QE, start QT, quantitative tightening, rolling off the balance sheets, and raise rates. And they have to truncate all three of these tools, which are all market squeezes, right? These are all market headwinds now, or at least taking off the tailwind at the same time. And this is what puts this in a very hairy situation, guys, where you have rising inflation. The threat of stagflation becomes way more apparent, okay, given the employment prospects of where we are as well. The market seems, everyone who talks to you about the employment market is strong. That's true. There's a lot of open job positions, but we still have a labor squeeze. So the stage is set. I'm not waving the red flag here, and you know, stagflation, this is, but I totally agree with you. Massive policy mistake. And it's going to be interesting to see how the Fed tries to rectify that. And certainly, like I said, that trifecta of ending QE, starting QT, and also hiring rates. People are calling for 4 to 5 interest rate hikes this year. Certainly sets the stage for a possible scenario of a washout in broader risk. Here's what SPX looks like. All right, that was number 9. That was number 10. SPX is number 11. Okay, and I'll hit dollar yen in a moment as well, because I do think you need to watch that very closely this week. But SPX, here's what it looked like last week. Okay, first I'll take you to the weekly chart, right? Because this is where all the sort of risk starts to pan out. Broader trend, remember, this is your original slope. All of the slopes you see here are parallels of this original slope. A parallel from last year's low gave you support in January or February, support in March, support in October and September, support back in November, support in December. We're testing it now. We're testing it now. Now, again, on a closed basis from a weekly standpoint, doesn't even come close. Haven't done anything near it. We haven't even closed anywhere near it. This is where we're trading right now. Looking at this, again, just some objective standpoints. You got divergence on the daily chart. We highlighted this into the start of the year, but now that you're getting a test of support, here's where the actual signal becomes a little bit more important. Okay? Divergence on all 4 of those highs. Here's the pullback. Okay? If we break this slope, near-term support 43.35, not near-term, this is weekly. That's your last straw. That's the low week close for November. Anything beyond this, yeah, you're looking for a market correction. Again, not the most popular call, but I'm not here to be popular. I'm here to tell you what I've seen in the market. So we're at support, and if this thing doesn't start to catch some bids soon, you could start to see this thing fall apart. Here's what it looks like on a daily chart. And here's what the daily chart looked like last week. Same level, right? 46.10. We were saying, hey, watch out, that's support. Well, ended up being a strong rebound, okay? Gave you a rally of what, like 3.6%, right? We're right back at the lows. We're right there again. So at the end of the day, we haven't closed a daily close below that slope yet, but if today does materialize, you would be looking for a larger decline in stocks. Taking a near-term approach on a measured move of what that would look like, look what happens. 100% extension comes in just above the 618 of the rally, gives you 44.81, 45.13, key support. Stop traffic, that's also the close lows that you made back in December, and also the high, the open for September. Not the open, excuse me, just that pivot. That September 16th swing, we did it again. We tested again September 27th. The breakout was next month, the October rally. So for all intents and purposes, the major focus for today is whether we close above or below 46.10. If we close below, like I said, 45.51, just a soft target, that's your big zone of support. Now, is there any structure to the decline? Here's what it possibly could be looking like. And this, guys, is the same slope I showed you last week. Same slope, 1, 2, 3. Came right off the median line, perfect rebound. Faltered right at the upper parallel. So we even made it through that 618, but we still failed right there. Here's the pullback, right back at support again. One other thing I wanted to add here is this could be sort of a near-term coiling. Here's the December low. One trend line, 1 touch, 2 touch, 3 touch confirms. Giving added credence, if we break below 46.10, below this region, basically the lows we just made today, it's a clear-cut breakdown or breakout of a near-term consolidation trend. So watch that here today. And this is why I came into this week really excited, because I think a lot of these ranges, a lot of these crunches, a lot of these coils will start to clear things out as we get deeper into the week. So keep an eye on this one. If we do break lower, 45.31, near-term support, big support, again, is going to be down here. And if we say that 100 off the high, let me add that here, gives you this sort of key zone of support. December lows in there as well. All right, questions on SPX? Again, here's what the intraday chart looks like. If we break this level, guys, again, big risk for a much sharper decline. Dual again, yeah, I got you. Here's the side-by-side tie. So what you see right here, by the way, just for clarity, what you see right here in this red line, that's this channel support, right? A closed basis held, a lot of intraday spikes, but a closed basis held. This is this, just the near term. 1, 2, 3, okay? All right, that is number 11. 9 minutes left. I got to pick up the pace here a little bit. I do want to cover dollar yen because the decline there has been so well documented. Guys, this is, let me take a step back. Here's dollar yen on the weekly charts. Here was our last update on dollar yen here on SB. We were starting to call, well, first of all, the weekly charts are absolutely critical because they've been so clean, right? We came into the year highlighting this major resistance. Once we broke, this was the first level of resistance right into the beginning of the year. This was the first week of 2022 trade. And boy, did we nail that high. 116 was the 2015 swing low. Major pivots along that plane. It converged on the median line. That was the high. Ever since then, we've been trying to gauge how deep the pullback gets. Remember, you also got divergence on those highs. Here's what it looks like on the daily chart. Really stretched, really major breakdown off that big level. We completed a 618 of the rally off the December lows, and this recovery failing today at the monthly yearly open, 115, 1509 to be exact. What does that mean? Well, this is what I'm looking at on the intraday. Really messy, but I kind of wanted to walk you through and see how this worked out. Break of downtrend support can oftentimes be the sharpest part of the decline. That's exactly what we got when we broke this downtrend right here, plummeted way through that 618 and that November open, right into a 1618 of decline off the high, uptrend support. Okay, so basically we broke this, plummeted right into uptrend support and rebounded. We cleared the 25% parallel. Here's the 50% retracement. Here's the yearly open. So for all intents and purposes, on this recovery, I was looking for exhaustion in this zone, 1490 to 1509. That's what we got. Is this a near-term high to fade? It's a tough call. If you're not in it already, well, first of all, if you are in it, you want to start to shave a little bit off as you get into that 1455. It's a decent pivot in price. We've been watching that level. But at the end of the day, this is a very strong rebound off uptrend support. So the onus is on a break of that downslope before you can mark resumption. So I still think the risk is for a failure, even if it pushes higher again. The yearly open, in my humble opinion, into 1522 is bearish inbound. Let me shade that region. Let me clean this up one sec, guys. So see, we're here sort of up, wrong zone, sorry about that. It's this zone right here. Your yearly open into the 618 at the drop. So that's 1509 into 1525. Watch for a reaction there. That's going to be the breakout level. Now, again, I don't think necessarily you get that here. I do think you get a little bit more of a pump fake and possibly another drawdown. The weekly open is way down here at 1411. We already made a 50, well, we already made almost 100 pip rally before pulling back. But at the end of the day, that's sort of the focus here for dollar yen. Watch yields, watch broader market sentiment. This one's going to be, I think, a big play here this week. So that's dollar yen number 12. Oil, Ted, I don't have a setup from the intraday standpoint, but I do have levels of which we were looking at for the daily. So here's what the daily chart looks like for oil. Let me show you the weekly, why not? Here's the weekly for oil first, okay? Levels of which we were looking at, the 2013 swing low is the high that we caught back in December. Oh, I'm sorry, back in October of last year. That's 85.61, we're still there. Not only is 85.61 that lateral level, Ted, but it's also the 75% parallel of the slope. So I do think on the back of this 4-week rally, that's a level you want to pay attention to. It's also last year's high, really, really objective stuff. So I'm bullish crude, Ted. I think you risk a little bit of a setback here. If you're holding long positions, this is where you want to book some profits, bring your stops to break even or better. I do think, like I said, the risk is for a minor setback, but it would be within the confines of the broader uptrend. So we've broken that high. So let's go ahead and scratch that retracement. Trying to nail a position. So this would be your near-term support, right? You want to try to see if you can get a fib or something to line up with that level to give you further conviction on it. Let's see where a basic 236 lands on this. 38.23 right there. 80.22, excuse me. Near-term support. And it's a bit ways away from where we are now, but this is huge. This is huge. If we breach on a close basis, you're looking for 87.14. You're looking for 90.68. I think you see that this year for sure. Okay, Ted says, okay, great. Thanks, great. You're more than welcome. More than welcome. So yeah, just curb your appetite on the long side. If you have long positions, I wouldn't be bailing on the whole thing because look, we're probing overbought now. And if we close into overbought conditions, guys, that's when the market has the most push. So in fact, if you're holding longs, that's like where you want to see the accelerated pop. All things held constant though, laterally and slope wise, you want to see something here. Now, if you bring this even closer, Ted, to like the near term, I was looking at this yesterday, it's just too tight of an ascent. You know what I mean? Even if you put some descriptive price action or slope to the advance, it basically has you at near-term resistance right here. Right? So either way you slice it, I'd be scared of chasing this any higher from this level. Okay, let's get a decent setback here for possibility of re-entry. Okay, I got 2 minutes left. So really quick, I just want to hit the crypto block. Look, Bitcoin, you guys remember where we've been talking about the levels that we noted last week was 40,596. Again, I actually got a little bit more long here. That's the level of resistance. That's your bearish inval at the monthly open. Well, here's the pullback. Are we completely off base and wrong here? Possibly. You're going to drop bearish inval down to that 44.32 level, which is the 618 of the rally off last year's June low. But at the end of the day, if we break lower, you're risking a washout way below 40,000, 37,250, 35,390 would be sort of your next downside targets. Again, this is all determinant on if this breaks. For me, this is not a trade. This is sort of a longer term thing. I think if it washes out, I'd be in again at 35,000 and change to maybe scoop up some more. But there is definitely, looks like there's volatility ahead. Looks like there's volatility ahead. Ethereum, very similar standpoint here. Big support. Now remember, we talked about the non-confirmation low. Bitcoin went through and tested the September lows. Ethereum did not. Fib support, 618 off the low, 100 off the high, perfect touch and rebound. So it still might be that we are bottoming in the crypto block, but for me, you know, I'm just waiting to see if these lows hold. This is not a trade for me. This is again an investment, sort of holding, see if we can't scoop up some of these cryptos on discount. Marchin says, hi, as usual, the unusual pairs, Kiwi CAD and Sterling Swiss. Please, if you don't have, can you please put them in the daily report. Yeah, Marcin, I'm up on time, but let me just take a quick look. Kiwi CAD. I don't even have on my list. I do. Here's Kiwi CAD. All right. Kiwi CAD. Okay, big breakdown here. 618 broke. Hmm. Yeah, looks like a breakdown. Looks like a breakdown. Now you're either. Let me take a step back. So if you take a look at the relative performance of Kiwi dollar, right? Man, my charts are lagging up. Relative performance of Kiwi dollar, right? That's at support. So when you take a look at Kiwi CAD, you're basically needing CAD strength to push this lower. That's your risk on the downside. Let's look at this on a daily chart real quick. Little lower. Huge head and shoulders in Kiwi CAD. Also another possibility. It depends. A lot of people are looking at the larger one, so left shoulder, head, right shoulder, which would put the neckline right there, and that would essentially say that we broke on this last move here last week. Could be a play, but that's longer term margin. So I think you look for support near term, not too far away, just based on that slope, right? And even on the intraday, no, just based on that slope, a little bit lower, seeing a little bit of a divergence here. If you break into oversold and you break below that slope, I keep an eye on that extension. 83, 200 pips to the downside or so. All right, so that's New Zealand CAD, and what's the other one? Sterling Swiss for Marchin. Sterling Swiss. That one I don't have a chart for. Let's see what it looks like. Man, I'm sorry here, guys. I'm not sure what's going on with my charts. Off the 52, off slope resistance, not quite. This is a retracement from the 2020 low. Looks like you might have just tapped the 50, just ahead of it. Really nice resistance zone. And finally, oof. Okay. Okay. It's a very interesting setup. I have big resistance here. Okay, I'd say big resistance. 2588 converges on the 52-week moving average, converges on downslope resistance off the highs they made in 2021. So nice spot, right? Nice spot to find the pullback. Now here's the pullback, right? How deep does it go? Don't think we'll get much clarity on this. Let's see what it looks like on the Yeah, and the slope is it's too messy here. You got the break, act as resistance before popping through. So keep an eye on that, but monthly open. Ooh, okay. Okay, yeah, that's key support. That's going to be your key support, 2296, 2320. It's the monthly and yearly open. All right. I'll see if I can put something together here. If I get anything more interesting on the intraday march, and I'll throw it on the report for sure. But watch for the reversal off big support. I mean, that's the name of the game on this one is basically the reversal off resistance. That's pretty big. And certainly the fact that you got a pullback of that magnitude on a weekly standpoint further consecrates that major resistance at 2588. All right. He says, okay, thanks. You're more than welcome. I'm way over on time, but it's always good to be with you guys, especially after a long break like this, to come into a week where we expect more volatility and there's a lot of clear ranges on hand. Certainly is exciting. So keep in mind all those inflation reads. I will see you guys on Thursday morning to give you an update on where we are from there. For the dollars part, it's all about where resistance is encountered, whether it's the yearly open or whether it's right here. We'll be looking for some inflection in the days ahead. Best of luck trading. I'll see you guys on Thursday. Cheers.